Hello guys, welcome back to UCL Forest Academy. Once again, we are welcome back to Academy again. And in today's lesson, we'll be continuing from where we stopped on the previous market structure video, where we have already posted the first session, which I encourage you to make sure you go and watch the first session. Should in case if you don't understand, I recommend you also reach out to us as a VIP student. You also drop your questions so that we can be able to redo the videos based on your question. You know how we do it. We send you videos privately so that to enable you to understand what you have already asked. Okay, so please don't forget about that. So we're going to be continuing from where we stopped on the previous video, where we talked about the what is the forex market, what is market structure. We talked about the three phases of the market, and the way we talked about the uptrend, we talked about the downtrend, we talked about the consolidation. Then I also explained something like accumulation, manipulation, distribution, and then I also talked about the Asian session, the London session, and the New York session. So all these things have been covered on the first session of the video. So what I want you to do is to go and watch that first session. Should in case if you have already skipped that first session, coming over to this second section, you're gonna have a problem. Let me just tell you, let me assure you that you're gonna have a problem because you at the long run have some confusions and it will be a little bit of painful. So I would want you to go back, take your time. It's not You're not rushing. The forex market is not running. All you have to do is to understand the knowledge, understand the idea. Then when you are fully ready, you can go back to the chart. So you don't need to rush. So calm down, watch the videos to the end so that you can be able to understand. So in today's lesson, or in this very particular video, I'll be explaining how to spot external and internal structures. So before I even do that, I want to actually like remind you guys that our online class is still running. Like our online class registration is still running. All you have to do is to reach out to us on the number that is written on the description below, or the number that you can see on the screen here. If a particular number you see on the screen, you can actually communicate with us on WhatsApp with a particular number, so that you can actually see, or you can get the procedures on how to register. This is the only online class that will mentor you like you paid for a private mentorship. It just we understand it's an online class, but you're gonna spot the big difference. This is not like your usual online class where they drop videos for you. At the end of the whole day, nobody's even keeping track on you, nobody is calling you, nobody is trying to understand whether you even understood what was sent to you. You get? So we have our different ways to track your development, to understand whether you actually understood the first topic before we can move on to the next topic. Always understand that your teaching is not related to another person teaching, and this is being done privately. We mentor you privately, and we keep track on your development work privately. And this does not have any like anytime like after 1 month or 2 months we are done with you. No, this is a lifetime mentorship. That is the reason why you just have to reach out to us to see how you can be able to be part of the particular academy. We just with 75,000 naira as a Nigerian, we join. Then with $80 as somebody residing out of the country or out of Nigeria, you can also join with $80. This is just a one-time payment. Or just know about that. Okay. Before I begin the video, I also want to remember you guys that you guys on YouTube are being so opportune to see this kind of videos that I'm about to drop to you guys. This is a VIP content. All right. What I want you to do is to like and subscribe to the channel. Turn on your notification button, locate it, turn it on, so that you'll be the first person to be notified by YouTube each time I'm dropping a new video. It's very, very important. You can see that I'm doing a very quality videos here on YouTube, packed with a lot of benefits that can enable you to understand how to trade the forex market. All you have to do is to like and subscribe, then turn on your notification button. Okay. All you have to do is to come to the particular session, the particular. I will create a playlist. Come down to playlist, and then you are going to see a market structure playlist. So you have to go through all those videos, and I know that you will definitely understand this at the end of the whole day. Okay. So I wouldn't want the video to be long, or we have already delayed. I think I have to start the video right away. Okay. So now, what do we mean by how to spot internal and external structure? So when you hear about the word external and internal, external is something that is outside, while internal is something that is what inside. So by the definition, external structure represents the overall trend of the market, and it's always visible on a higher time frame. It's always visible on higher time frame. I also want to remember you guys that we have something we call a daily time frame, which can be called a higher time frame, and we'll have what we call. Let me even start from monthly. This is a monthly time frame. This is a higher time frame, This is what we call a higher time frame, a strong higher time frame. We also have a weekly time frame, and then we equally have a daily time frame. These are like a higher time frame. We equally have a 4 hour time frame as well. So these are what we call a higher time frame. The reason why they are called a higher time frame is because the structures there are massive. The structures there are what are very massive, and you don't trade on those time frames. You don't press your buy and sell on those time frames, because you will see that you'll be risking like almost like if not 500 or 300 pips. So you don't take any executions on those time frames, but it's actually used for analyzing the market and using what has happened in the past to predict what is likely to happen in the future. All right. So the moment that you have already done your analysis, although we have a particular session or we have a topic on a very particular market structure, which we call top-down analysis. I think that's the last video of a particular whole thing. We'll be analyzing the market from higher time frame down to the mid time frame, or down to the intraday time frame, to look at one or two things, or to look out for one or two things for to go in for a buy or for a sell. Or else, for just for the sake of our learning process, or for the sake of our learning stage, we just have to understand for now that the higher time frames we have are weekly time, monthly time frame, weekly time frame, daily time frame, and forward time frame. And there is no need for us to go deeper to explain, because it's being kept on another section of a video. All right, so don't worry about that. We definitely explain everything. So now, when we talk about that something is seen on higher time frame, before I continue, I want to list them. Monthly time frame, weekly time frame, daily time frame, and forward time frames are higher time frame. And then we have what we call a mid higher time frame, mid higher time frame like this. I normally call it a mid higher time frame. Whenever you see me writing F, I mean time frame. Okay, so I call those mid higher time frame as 2 hour time frame and 1 hour time frame. Okay, when we reach the zone marking, or when we start analyzing the market and start drawing our zone, there are several things I'll be breaking down for you guys, how to refine a zone. Then you come to understand the reason why I called this very particular 2 hour and 1 hour time frame a mid higher time frame zone. Okay, and then there's another part that we call intraday time frame. Intraday time frame. This very particular intraday time frame 30 minutes time frame, although we start from 45 minutes actually, but I'll just start from 30 minutes. So we have 30 minutes time frame. I'll just write 30. Okay, just know 30 is 30 minutes. All right, we have 15 minutes as well. We have 5 minutes. I think some people even add 2 minutes, but I'll just keep it around numbers, and then 1 minute as well. So these are like the intraday time frames. Now remember what I said, that you don't go in for a buy or for a sell on higher time frames, but you just do your analysis. Then you will have to scale down to the mid time frames to refine those zones. Then when we talk about intraday time frames, these are time frames that you really look out for one or two things. When we go down to change of character or pattern of entry, then you understand that some people, maybe at the end of a particular video, you will tell yourself that I want to be going in aggressively, or I want to be going in with confirmation entry. So if you have chosen the path to go in with aggressive, that means you are going to be choosing a mid higher time frame as a point of as a pattern of entry. Then if you're talking about an intraday, you need to scale down to all these time frames to look out for one or two things, which I will explain on today's lesson. All right, so I think I'm delaying, right? But I don't need to be fast. I just have to take my time to explain all these things to you guys, so that you will not really struggle. Okay, that is how I normally teach. So when we say that something is seen on higher time frames, as I've already explained, it defines these external structures defines whether the market is in an uptrend market, or a downtrend market, or a range market. Now, even before I dive deeply on this, I want to tell you that, let's say you visited a friend, and that your friend is residing or staying on the third, on the fifth floor, and maybe that building is like 10-story building, and this your friend is residing on the fifth floor. So you know that if let's say you visited the friend in the night, then there's darkness everywhere. There's no light, and there's no dark, and there's you cannot even see the full building. Or you know that, okay, he told you to come over to the particular place, climb the step, start coming up. Then when you start making those moves, you are going to struggle to understand the very particular flat that you have to end up, or you have to stop. or to knock at the door, you are going to struggle. But let's say you came around afternoon period, then he told you that he's living on the fifth floor. He doesn't need to tell you the number of steps you need to climb, or or maybe the routes to follow, because you are outside the building. You have already pictured the building, and you have already seen where the fifth floor is, and now you have already known that beforehand that I have to pass the first floor, the second floor, the third floor, the fourth floor before getting to the fifth floor. So the moment you are picturing the building from outside, it means you are looking at the external structure of the building, just to be able to get a clear information of how you are going to what you are going to get to your destination. All right. So in the forex market, we go to higher time frames like monthly time frame, weekly time frame, daily time frame, just to see the overall trend, just to see the bigger pictures, and to have a clear information of where we want to go in for a buy or a sell, depending on the trend of the market. So I think I've really explained more. So this that higher time frame will always tell you that, okay, fine, the market is pushing to the upside, and you should really concentrate your mind on buying. Okay, and then before I explain that very particular stuff, I think the internal structures, I mean, let me explain the internal structures. Then let's try to draw the chart, and you will see how in internal structure and external, the difference between the internal structures and external structure. Okay, so when we talk about internal structure, this consists of smaller or more detailed price movement within the external structure. Understand this very particular definition. I come again. This internal structure consists of smaller, more detailed price movement within an external high. So these are like, just understand this thing, that that time you visited the friend, you saw you are outside the building, and you have already looked at the building, you have already identified where the fifth floor is. Now the moment you step into the building, passes the first step, now you are inside the building, you are now in internal. Are you getting me? Yeah, those steps that are helping you to get to the fifth floor of the building is what we call internal structure, that are not seen outside the building. Can you get me now? They are not seen what outside the building, rather they are seen inside the building. So now when we go to the forest market, those steps that you are climbing that led you to your friend's house are still like a small highs and lows on those what on those on inside that external structure. Now I think I'm making things very difficult, but let me just try to draw on the chart. So you just need to understand that this is only visible on lower time frames and helps traders to refine entries and exist. So the reason why you come to those internal structures is that, let's say when we are done with the pattern of entries, and then you come to understand the different pattern of entries, then you on yourself will now have to decide how you want to be going in for a buy or sell. Okay, then the if like you want to go in for a buy on lower time frames, like you want to be using some confirmation entry of a stock, that means you need to scale down into those intraday time frames to look out for those stuff that you want to see. Okay, they are those intraday time frames are always used for entries and what and exits, but higher time frames are used for what, for knowing the direction of the market. Now let's do the whole thing now. So let's say you came to the chart number one, the market, you went to daily. Let's start from daily time frame. You went to daily time frame, the market is printing a new high like this, the market is printing a new low like this, and you know that the moment the market prints this very particular low, this is a higher low, don't forget, and this is now the market have to move to the upside to print a new higher high. The next thing you see the market returning back to print a new higher low. The next thing the market will push up to again to the upside, breaking the previous higher high, indicating that the market is clearly on a uptrend market. And now let's say the market pushes like this, break it above, you can see it has broken the previous higher high. All you have to do, as somebody that has already gone to higher time frame, let's say you came to daily time frame and you see this kind of thing. Now the truth of the matter, oh god, what is this? Now the truth of the matter is that you came to daily time frame, you spotted that the market is pushing to the upside this way. Let me come again. So I really apologize about that. This is just my mouse disturbing. So now you see, now the market has actually what? The market has actually taken out the very particular high. The market has taken out this high. So the moment that the market has taken out, look at the high I'm pointing here. The market has actually taken out the very particular high that is here. The market has taken it out. So you know what I told you on that very particular first session. I said whenever you spotted that the market has broken a high, all you have to do is to wait for what? Wait for retracement. Wait for retracement and go in for a buy after the retracement, right? That was what I told you guys. So when, let's say, you came to daily time frame, the market has printed a new high like this, and then you have seen that the overall trend is bullish. So as you are moving down to far hour time frame or to those mid time frames, you are looking out to mark out your zones. You are equally looking out to what? To mark out your bullish point of interest, or to mark out the bullish POY, or to mark out the bullish demand zone. I know I'm diving deep, but there's no problem. Don't worry, I'm going to explain something about POY. But what I mean by POY is like the place you want to go in for a buy. It means that you are marking out the place you want to go in for a buy, not the place you want to go in for a sell. Now, most of you will argue with me, this is actually a daily time frame. Do you mean I have to wait for the market to retrace back to where I want to buy? Now, there are two things here. Maybe during the strategy, when I'll be teaching you guys on the strategy itself, you come to understand that there are times to wait for the market, and the moment that the market is doing this kind of thing, you can just leave the chart and then do other things that I will tell you on that very particular what's video. All right, that is the more reason why you have to look at the particular number. Just use the description on below, reach out to us on a particular number to join our academy. This very particular stuff, you're going to get multiple videos on the very particular topic that will enable you to understand all the very particular what lesson. Okay, so that is it. So now, when we talk about that, the market is now like this, the market is now retracing. Now, when we scale down to 4 hour time frame, the truth of the matter is that you see this thing that is coming back like this little retracement that you see, maybe on daily time frame, just like 2 or 3 candles. Now, on 4 hour time frame, it is definitely going to look like this. Now, let's say we are talking from here. The market printed a new high, the market printed a new low, the market printed a new high again, the market printed a new low. Now, let's say that this particular move now want to draw, is this particular move, is this move. Now, the market has actually broke a shoulder to the upside. Now, upon the, you will see the market coming back this way on 4 hour time frame. You see the market coming back like this. So you get, so this is like a retracement. Remember that this is what a retracement, and these are internal structures. These are what internal structures. For the market to make all this move, it is going to look very clear on daily time frame, but on 4 hour time frame or 1 hour time frame or 2 hour time frame, you will see something that look like this. The market will print a new high, print a new low, print another new high, print a new low, print another new high, print a new low, and before breaking a structure to the upside. All right, so this is how the market actually moves on 4 hour time frame or on 1 hour time frame. Okay, even if you go down to 30 minutes time frame, let's say you're going down to 30 minutes, you see this thing that looks very simple like this on 4 hour time frame. On 30 minutes time frame, you will still see another up and like another highs and lows, okay, on 30 minutes time. But this is what we call internal structure. We call it what? Internal structure. So these are structures that are found inside the external structure. So where is the external structures? How can you be able to get the external structure? The external structure is the high and the low that printed that retracement. Is the high and the low that printed what? That retracement. Then when you look at this whole thing now, you could see that the moment the market printed a particular high, then we saw a dip. We started seeing the market dropping to the downside like this. So see the market dropping to the downside. And where is the low that gave birth to a particular high? Let me log the particular stuff. So where is the low that gave birth to the particular high? Where is the low? I mean, where is the origin of all this buy that gave birth to the particular high? Look at where the origin is. Are you getting me now? So since this is your origin, and then this is now we talk about, this will be our what? Our external low. Our external low. So whatever that's happening inside it is what we call internal structure. There is a part on the particular market structure which we are going to explain later on, which is a trading range. Okay, I think that trading range is under top-down analysis, where you're going to understand when the market is actually on a daily range or maybe a trading range. You look at one or two things at every particular range that will enable you or will determine that the market will continue pushing to the downside or will continue pushing to the upside, or whether the market trend has totally reversed. Okay, so I believe this is what we call internal structure. So when it is on sale like this, when you see the market print a new high on 4 hour time frame, it's going to look very simple like this. It's going to look very simple. The market will just come, or maybe daily time frame, the market will just come, break the particular high. But on this particular stuff now that we call 4 hour time frame, for the market to break this particular high, this particular low, you're going to see something that look like this, where the market will now print a new high, a new low, a new high, a new low, a new high, a new low, a new high, a new low. So this is how the market will be going up, coming down, going up, coming down until the market will now break this very particular watch low. So it can't be seen like this on daily time frame, but it can be seen like this on 4 hour time frame or 2 hour time frame. When you scale down to all those 30 minutes time frame, you will even spot more of it. Okay, so this is what I mean by internal structures. I mean by what? Internal. So let's go to the chart now to try to look at the internal structures versus the external structures. Now to have informations of what we will actually be doing on the chart. Okay, let's use GDP JPY. Let's use GDP JPY to try to explain one or two things about internal and external structure. Okay, so now what I will do, okay, I think I've already used this very particular stuff as this does not mean that this is my favorite pair. Don't mind me. I don't know why I even came to that, but we are gonna use more examples. Okay, so this is the market now on daily time frame. So what we could see here, remember I told you guys that the market is actually consolidating, but there's actually something I forgot to, or I didn't actually forgot. I think it's the right time to tell you guys that when the market is actually consolidating on daily time frame, the truth of the matter is that you need to get the highs and the lows, right? But you need to understand that what is consolidating on daily time frame is actually a trending market on 4 hour time frame, a massive trending market. It could be a massive downtrend market or it could be a massive uptrend market because the height of the daily range, the height of the daily resistance to the low of the daily resistance can be massive number of pips. Okay, that is why when you go down to 4 hour time frame, you see that it is a massive trend. Okay, when we look at the particular stuff, I'll try to remove the particular stuff now. From here, you could see the market printed a new high, the market printed a new low, and this high couldn't take out a particular structure. Don't worry about that. We are only concentrated on understanding what is internal structure. So when you see this low printed a particular high, this low, let me zoom out very well. So this particular low printed this particular what high. You can see, let me use my Eclipse tool so it can be very yeah, this thing. So you can see from here we have the origin of all these very particular buy, and from here we have all the origin of all these very sell to the downside. Now what we have to do, this is a daily time frame. This is a what? This is a daily time frame. Now if I mark out something that look like this, if I scale down to what they call it, if I move down to 4 hour time frame, you are going to see some immediate up and lows on every particular what place. So let's go to 4 hour time frame and then let's try to compress that part as well, and then let's try to expand the chart to see what I meant by that. Remember, I've taught you guys highs and lows, lower high, higher highs, and this. So you can see this is what happened on that very particular daily time frame. When we are on daily time frame, you can agree with me. It was just candle, 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 just one candles. But on 4 hour time frame, it is something that look like this. The market printed a new high, printed a new low. Let me expand the very particular so that you can see it proper. What is wrong with this thing? So look at it now, look at it here. So the market printed from here, the market sold to the downside, printed a new high here, printed a new high here, now printed a new low here. So you can see the market pushes aggressively to the upside and now break a structures. Now the market has taken out the particular higher low before. It has taken out the particular what higher low. Look at this particular higher low. So the market has taken what the particular higher low, and the next thing we see the market pushing to the upside. Now this is a new higher, this is a new higher high, and this can be called a new higher low. You could see that the market has now pushed massively to the upside and has actually what break a structure. When you go down to 2 hour time frame, this thing will equally what expand more. It will equally what expand more. So this what I'm doing actually now is what we call a internal structures. This is called what internal structures. You can see they are found inside the external structure. Somebody is going to ask me, but this is actually a 4 hour time frame. So the truth of the matter is that a daily time frame can produce an uptrend. When you scale down to 4 hour time frame, you will definitely see internal structures. So we even have a higher time frame internal structures, and we still have a lower time frame internal structure. So these are like higher time frames internal structures. All right. So this is how the markets keep pushing to the upside, breaking the previous highs and be forming the new highs. All right. So this is that. So the structures are actually expanding. So when you even go to 2 hour time frame like this, let's go to 2 hour time frame, come to that very particular part, you will even see, even if you go to 30 minutes time frame, you might even see more. So you can see, look at how it seems on 2 hour time frame, very clean, very clean. So this is what we call internal structures. Now let's now go back to daily time frame to see whether we can be able to mark out all these things on daily time frame. So when you go to daily time frame, you can see now that the market is so compressed. It's just like candles. The charts here are so packed, like the candles here are so close to each other. That's why you need to scale down to 4 hour time frame just to understand or to see those internal structures. So what you could see now, remember that this is the low of that very particular high. This is the low of it, and this is now a major structure low. A major what? A major structure low, or can still be called a standard structure. So I also want to remember you guys that you see that thing that was called a standard structure can be called a major structure. Can be called what? A major structure. Some people can still call it I think external structure is called a major structure. Why internal structures can also be called a minor structure. So this is an external high and this is an external low. So we could see that we equally have some retracement and ups and downs inside every particular what high. So that is what we call internal structures. All right. So this very particular stuff again here. Look at this very particular one here. These are what we call a internal structure. So what type of internal structure is this? This is what we call a bearish internal structure. This, remember what I told you, when the market is trending to the upside, we call it what? We call it an uptrend, and then this is how it's being marked. Then when we talk about a trend, a downtrend, this is how it equally what looks like. Okay, so look at it. So this is the market pushing to the downside in a particular way, breaking the previous lower lows and forming a new lower low. So this is how the market looks like on internal structures. I believe if you have more questions to this, you can actually reach out to us on your private chats. Remember how we do it. Just send us a message so that we can be able to assist you, so that you can equally be able to spot more of internal structures and external structures. Okay, so let's break down more particular parts again. So you see, this particular place is what? External high. Here is what? External high. Here is what? External low. You can see there is an external low. And there's something I want to remember you guys again. The moment the market takes out a major structure low like this, if this thing now, let me draw it this way, if this particular stuff now keep selling and break a structure to the downside and then pushes massively to the upside this way, the moment the market breaks this particular external low, you are going to see what we call a deeper retracement. You're going to see what we call what? A deeper retracement, or sometimes full retracement. What do I mean by deeper retracement and full retracement? What do I mean by that? What I mean by deeper retracement or full retracement is when the market has entered or has retraced or pulled back or mitigate back to the 78% Fibonacci retracement tool, or to the 61% Fibonacci retracement tool. All right. So you remember how we plotted those Fibonacci retracement tools. So that is how it looks like. So when the market now gives you a particular full retracement, it is always seen whenever the market takes out a major structure low, and you see now see the market start again dropping to the downside by printing a new high, a new low, a new high. All these things are internal structures. All these things are what? Internal structures till they now break an external low. All right. But you see, the number of pips that the market is going to give you the moment it breaks an external structure cannot be compared with the number of pips it's going to give you when it breaks an internal structure. So it could be that after breaking a particular structure, from here to the particular place could be like 500 pips, or could even be like 600 pips. But when we talk about when the market breaks an internal low or internal high, you will see something like 50 or 60 pips, or sometimes even like sometimes even like 100 pips or 80 pips. When you go to all those lower pairs, or maybe when you go down to 30 minutes time frame, see if 30 minutes time frame give you a high like this, if 30 minutes time frame give you a high like this, like a new high like this, retracement back to this zone and going in for a buy here off to the particular place can be from here to here, can be like 20 pips, can be like what? 20 pips or 30 pips. But when 4 hour time frame gives you something that look like this, from here to here can be something like 80 pips or even 90 pips or 100 pips. But when a daily time frame gives you something like a break of structure and happens to retrace and start pushing to the upside, you're going to see 200 pips and above, or sometimes 300 pips. So that is what I actually mean by internal structure and external structure. Okay, so I believe that this particular video really helps you to understand what I mean by external structure, internal structure, and what. And I think external and internal structure, which can be called minor and major structure. So, all right, guys, I want to stop here on this particular video. We have already covered everything about external structures. You know what to say. Please, I want you to go back again. Go like try to watch the video 1 2 3 1 2 3 1 2 3. Yet you will definitely understand how to mark out internal and external structures very well. Okay. For now, we are going to stop here now. Okay. Now.